Okay, now I had a video about Japan's debt crisis, which is interesting to look at, thinking about the United States is soon going to be in the same position as Japan. That's why.
Economists sometimes say that there are four kinds of economies: developed, undeveloped, Argentina, and Japan. The latter of which has spent most of the past 3 decades defying economic gravity by printing and borrowing absurd amounts of money without inviting too much inflation or pushback from the bond markets. However, as Japan's economy has started to look more normal, the problems you would expect from such a heavily indebted economy have materialized, including rising borrowing costs and depreciated currency, with the Japanese yen now touching a 40-year low earlier this week. So in this video, we're going to explain what's gone wrong for the Japanese economy, and explain why, even if an acute crisis still looks unlikely, it's hard to see things getting better.
Has Japan's debt crisis finally arrived?
Ever wondered who's really funding the news you read? But luckily you don't have to wonder with TLDR, as every year we share a detailed breakdown of our revenue, costs, and profitability. Find out who's funding us and if we made a profit last year by watching the video linked in the description. So let's start by explaining how Japan got itself into this predicament in the first place. After decades of rapid economic growth, in the 1990s, Japan suffered from a series of economic shocks in quick succession. Property prices and the stock market essentially collapsed, and Japan's economy entered a period of stagnation, with both growth and inflation.
I think at the height of the bubble here, right here, the height of the bubble in Japan, the royal palace gardens in Japan, its value was greater than all of Los Angeles. All the property in Los Angeles, this one garden, because it was so overvalued. It was a crazy bubble.
Stock market essentially collapsed, and Japan's economy entered a period of stagnation, with both growth and inflation falling close to zero. In an attempt to get the economy moving again, Japan's central bank, the Bank of Japan, or BOJ, bought up billions of yen's worth of government bonds, essentially printing money and giving it to the government to spend. Now, usually you would expect that printing lots of money would lead to inflation, and this was sort of the aim. Unfortunately for the BOJ, this didn't really happen. Both Japan's inflation rate and its growth rate stuck stubbornly close to zero, while the Japanese government's debt burden ballooned to more than 200% of GDP, one of the highest in the world. That was until early 2022, when the inflationary shock that swept across the world pushed Japan's annual inflation rate above 2% for the first time in nearly a decade. Originally, there was some hope that this external shock might bring the Japanese economy back to normality by triggering what's known as a wage price spiral. For context, a wage price spiral is what happens when workers start demanding higher wages to compensate for higher prices, which would mean more spending power for Japanese households and therefore higher prices, etc., etc. In the best case scenario, this sort of wage price spiral would essentially lift Japan's baseline inflation rate up from basically 0 to nearer 2%, which is the Bank of Japan's target. In the best case scenario, this slightly higher inflation rate will also drive economic growth by encouraging Japanese households to spend money.
Yeah, I do not believe in printing your way to prosperity.
Instead of saving.
I know that's not the way it works.
It and letting inflation eat away at its real value. Unfortunately for Japan, while inflation did indeed return, it returned at a higher level than Japanese policymakers would have hoped, hovering well above the BOJ's 2% target for most of the past 4 years. This is in part because Japan suffered a more severe wage price spiral than expected. Wage growth for unionized workers has come in at 5% for the past 3 years, and because the global economy has experienced a series of additional inflationary shocks in the past couple of years, including most recently the war in Iran, which now threatens to push Japan's inflation rate back up above 2%. Anyway, persistent inflation is what's driven the ongoing sell-off of the yen, Japan's currency, which has fallen pretty steadily since 2022, but plummeted to a 40-year low of 163 against the dollar last week. This is in part because inflation erodes the real value of any currency, but also because, perhaps more fundamentally, the BOJ didn't raise interest rates as sharply as other central banks. For context, basically every country in the world has struggled with high inflation in recent years. To combat this inflation, basically every other central bank has raised interest rates, because higher interest rates...
Yep, But if you have a huge amount of government debt, you can't afford to raise interest rates.
They're supposed to reduce inflation by encouraging people to save and therefore sucking money out of the economy. The BOJ, however, held interest rates at negative 0.1% until March 2024, when it finally raised them to 0.1%. For context, at the same time, interest rates were at 4.5% in the EU and 5.5% in the US. This gap has narrowed a bit since then, but Japan still has basically the lowest interest rates in the world. This interest rate differential put more downward pressure on the yen because it made it more attractive to save your money in dollars or euros rather than yen. This has been exacerbated by the fact that the BOJ has tried to intervene to defend the yen on a number of occasions since 2022, including most recently an eye-watering $73 billion intervention a couple of months ago in an attempt to hold the yen at 160. But these have ultimately been unsuccessful. This has undermined the BOJ's credibility with investors, who no longer believe in its ability to stem the yen's decline, and so have continued selling the currency in anticipation of further depreciation. So at this point you might be asking, why didn't the BOJ hike interest rates like everyone else? And well, some of it is down to the fact that inflation wasn't running as hot in Japan as in other countries. The main reason is Japan's massive debt burden.
250% debt to GDP. That's, if interest rates go up, yeah, you're screwed if you're Japan.
In short, raising interest rates almost mechanically pushes up bond yields as well, because higher interest rates encourage people to save, which means that there's less money sloshing around for anyone trying to borrow money, including the government. And this is why the BOJ didn't want to raise rates, because higher yields would make it significantly more expensive for the Japanese.
By the way, that made no sense. Let's listen to it again.
Because higher interest rates encourage people to save, which
encourage people to save, and people who save buy bonds. That's how you save. So
means that there's less money sloshing around for anyone trying to.
Raising interest rates means the government's printing less money to buy bonds. So you have less printed money, but you have less demand for bonds too.
Borrow money, including the government. And this is why the BOJ didn't want to raise rates, because higher yields would make it significantly more expensive for the Japanese government to service, i.e. pay off the interest on, its massive debt pile. This was made even more difficult by the fact that Japanese bond yields were already rising, both because inflation also pushes up yields.
That's true.
Because, under Prime Minister Sanae Takaichi, Japan's government signaled that it wanted to borrow even more money in the coming years. Similarly, the BOJ couldn't just print money and give it to the government to keep yields down, because this would be inflationary. Artificially capping yields would also make Japanese bonds less attractive to international investors, which would put even more downward pressure on the yen. And this is the fundamental dilemma that the BOJ currently faces.
Yeah, it's in debt spiral. Basically, you print money to bail out the government, or if you don't print money, then the government can't pay its interest and defaults, and both are bad.
High inflation and a depreciating currency should invite higher interest rates and less money printing. But the BOJ can't do this while Japan's fiscal situation looks so precarious. In this sense, the BOJ has to choose between a currency crisis and a bond crisis. So far, it looks like it's trying to split the difference.
That is always the choice when there's a financial crisis and the banking sector is in trouble. Do you A, bail out the banks and print money, or B, let the banks go under, which then you have deflation? During the Great Depression in the United States basically chose to let banks go under. A lot of basically money supply destroyed by those banks going under. Money became more valuable. If you were someone in a bank that didn't fail, well, you were one of the few people that had money, and so your money was worth more, and you had more purchasing power. But what usually happens, nearly always, is that countries choose option A, which is printing money to bail out banks or bail out the government if it has huge debt to GDP, and currency collapse accelerates.
Difference. But while this strategy has been successful in averting an acute crisis, it hasn't been able to stem the ongoing sell-off in either Japan's currency or its bonds, which have both recently touched multi-decade lows. Now, to be clear, an acute crisis is still unlikely, for the simple reason that the Japanese state has, over the past couple of decades, accumulated trillions of dollars worth of foreign.
Yes, except here I have a little bit to add. Back when Japan started accumulating U.S. treasuries, articles in U.S. media explained the reason for it. Japan was buying treasuries to bail out the United States, to prop up the dollar. That was the initial reason given. That is the real reason why Japan has so many treasuries, is to prop up the United States, prop up the dollar. So it's not allowed to sell. It's one of our... It has been one of our proxy states. There's one-party rule for decades in Japan, and their duty was to dutifully buy U.S. treasuries and prop up the dollar. If Japan started dumping $1.2 trillion of U.S. treasury bonds on the market, what do you think that would do to the dollar and treasury market? We almost regard it as an act of war. And so even when their currency's in trouble, they haven't been selling this down. I don't know if they can.
Assets, which it could always sell off to try and pay down some of its debt or defend the yen. But this would amount to selling the family silver and leave the Japanese state less prepared for any future crises.
Yeah, so they'll hold on to their treasury reserves. And when people ask, why are you letting our currency go down? And why don't just sell the treasuries and pay down Japan's national debt instead? And they'll say, no, we need these reserves for an emergency. And they'll keep on saying that right up until the Japanese currency crashes. And if they start selling it, then on that unlikely event, then we're entering the final phase of the dollar collapse if that happens, because you understand, treasury market is one unified blob. If you have the U.S. government that's trying to sell huge quantities of treasuries every month, anyone else, it becomes a big seller out there. If you have, the U.S. is going to sell $1.5 trillion just to finance our defense spending for this year. Well, if Japan sells $1.2 trillion of treasuries, that's going to severely push up the amount of interest that the United States is paying on treasuries. It's going to crash the treasury market. Well, anyway, I just wanted to point out that Japan is in trouble. The other important thing I wanted to highlight was the fact, the dilemma of not being able to raise interest rates because they're afraid that Japan might not be able to service its debt. Well, the United States is basically at that point too, where if ever the Fed raises its rate to fight inflation, I don't know if the United States can pay its debts anymore. The United States might enter a debt spiral too. Anyway, this will be on YouTube. Like and subscribe. Come watch and kick over Twitch. And I'll see you next video. Bye.